Hi everyone, today we'll be going over accounts May-June 2021, paper 2 question number 3. This is the structured paper 2 and the total marks for this paper is 90 and we also have a time limit of 90 minutes. And since question number 3 is of 15 marks, we will be attempting to solve this question under 15 minutes. So let's get started. Jason prepared the following statement of financial position which contained errors, and he prepared the statement of financial position at 31st December 2020. We can see that the total assets value is of 67,380, whereas the total capital and liabilities balance is of 67,000. And in addition to some items being recorded in the incorrect sections, so this is important. It says that some items are recorded in incorrect sections, so we need to look for those items as well of the statement of financial position, and the following errors have also been discovered. Okay, first let's have a look at the question. Calculate the revised profit for the year ended 31st December 2020. So whenever we're asked to calculate a revised profit, we always have to start with the draft profit, which will be given in the question. So let's just start with that first. So we'll start with the draft profit for the year. Let's look for this amount in the given question. So we know that profit is always recorded in the capital section and it's given right here. So the draft profit for the year is going to be 11,270. Let's write that down. Now we need to rectify the errors that have been mentioned above. So the first one is that the closing inventory had been overvalued, all right, by 510. So what we know is that closing inventory is always added when calculating the profit. So that's a plus, right? Because that is always added. Then we know that the value had been overvalued. So in order to rectify this error, we need to subtract the amount of 510 because closing inventory had been overvalued by that particular amount. So we need to subtract it, right? The amount of 510. So a plus and minus would again make another minus. So what we need is we need to subtract this amount 510 in order to rectify the error for closing inventory. Let's do that. So we're just going to subtract the closing inventory, and the amount for the overvaluation was 510. So that's just going to be in a bracket. Now the first error has been rectified. Let's look at the second one. The balance of the rent receivable account, debit 220, had been included in other payables in the statement of financial position. So this is an error relating to the statement of financial position and it has no effect on the profit. So we can completely ignore this second error. Now third one is that the depreciation at 20% per annum had been charged using the straight line method instead of the reducing balance method at 20% per annum. So what we did was we charged the depreciation amount using the straight line method, and that is our error. Now in order to rectify that error, we need to charge the depreciation under the reducing balance method at 20% per annum. Now in order to reverse this effect, we first need to add the depreciation amount under the straight line method because we already subtracted it while calculating the profit. So in order to rectify, we just do the reverse, we add that amount. So the first thing that we do is look at the cost for the non-current asset. So the cost is 65,000, and if we were charging the depreciation using the straight line method at 20%, then that would have just been 65,000 into 20%. So we will just add that amount. Let's do that first. So we're going to add the depreciation. Straight line method at 20%. So the depreciation amount is just going to be the cost of the non-current asset, which is 65,000, and we just multiply it with 20%, which can be written as 0.20. So the depreciation under the straight line is going to be 13,000. Now we need to find the actual depreciation under the reducing balance method at 20%, which should have been charged. So when charging a depreciation, we always subtract it in order to calculate the profit. So we're going to subtract the depreciation now under the reducing balance method. And this is also charged at 20% per annum. Now for the reducing balance method, we require two factors. So the first one is cost. We already have that as 65,000. And the second one that we require is the accumulated depreciation. Let's have a look. So the accumulated depreciation, which is also known as the provision for depreciation, is 31,000. But this also includes the amount for depreciation that has been charged for this year, but we do not require that year's, right? So we already figured out the depreciation charged for this year, which was just 65,000 into 0.20, which gave us the amount at 13,000. So we should just subtract this 13,000 from the total accumulated depreciation so that we figure out the provision for depreciation at 31st December 2019 in order to figure out the depreciation charge for the year ended 31st December 2020. Let's figure out the provision for depreciation required by subtracting the amount 13,000. So this gives us the provision for depreciation as 18,000. Now we can easily calculate the depreciation under reducing balance method. So we just first subtract the provision for depreciation from the cost. So that's going to be 65,000 minus 18,000. And then we multiply it with the rate. So rate is at 20%. So we can just multiply with 0.20. This gives us the correct depreciation charge for the year, which is 9,400. So we're going to subtract it. Okay, we just completed the third one. Let's have the look at the fourth error. The balance of the drawings account had been understated by 580. So drawings have no effect on the profit for the year. So we can completely ignore this error for now. All right, now we can easily figure out the revised profit for the year. In order to figure out this amount, we just need to add all of these values. So that's going to be 11,270 minus 510 plus 13,000 minus 9,400, which gives us the revised profit to be 14,360. Now this concludes the first part. Let's move on to the second one. We need to prepare the corrected statement of financial position at 31st December 2020. So we will start with the non-current assets section first. So if we remember correctly, we were given the cost and provision for depreciation, so we can just copy the exact same format. So that's going to be the cost. Cost is not going to change. So that's going to remain 65,000. Then we need the provision for depreciation. Okay, the provision for depreciation at the year ended 31st December 2019 was 18,000, which we figured out in the previous part. But this is the corrected statement of financial position at 31st December 2020, which means that we also need to add the depreciation charge for this year to the provision for depreciation. So we also figured out the correct depreciation charge to be 9,400. So we are just going to add this amount to the last year's provision for depreciation. This gives us the total required provision for depreciation to be 27,400. Now, in order to figure out the net book value of the non-current assets, we just subtract this provision for depreciation from the cost. So that's going to be 65,000 minus 27,400, which gives the net book value to be 37,600. All right, nextly we move on to the current assets. Let's have a look at the given incorrect statement of financial position to see what items should be recorded under the current assets. So the first one is inventory. Then we record the trade receivables, and we also need to subtract the provision for doubtful debts from the trade receivables in the current assets section. Nextly, we have other receivables. Yes, I think that's going to be it. So the first item to be recorded under current assets would be inventory, which has a value of 17,390. But if you remember correctly, we were told that the closing inventory had been overvalued by 510. So we need to subtract this amount from the given amount in the question of 17,390 in order to figure out the correct balance for the inventory. Let's do that first. So previously in the question, it had the value of 17,390, and we were told that the value for the closing inventory was overstated. So we just need to subtract the value by which it was overstated. So this gives us the balance for inventory to be 16,880. Now let's look for the next item. So we are given the trade receivables amount to be 14,800, and we need to subtract the value of the provision for doubtful debts from this amount. So that is just going to be 14,800 minus 480. Let's write that down as well. So the given value is 14,800 and the provision for doubtful debts is 480. This gives us the value of trade receivables to be 14,320. Let's look at the another item. We have other receivables with the balance 490. But there is an error relating to this term. So the balance of the rent receivable account, this falls under the other receivables terms. Debit 220 had been included in other payables. So we can just simplify it by saying that the other receivables had been understated by 220. So in order to rectify this error, we need to add the value of 220 to the value given in the question for other receivables. So let's write that down. So the given value was 490 and it had been understated by 220. So we're just going to add that amount. This gives the total for other receivables to be 710. Now we can find the total for the current assets by adding these three values. So that's going to be 16,880 plus 14,320 plus 710, which gives the total current assets value to be 31,910. Now we can find the value for the total assets. In order to do so, we add the value for the non-current assets and the value for the current assets. So that's 37,600 plus 31,910. This gives the total of 69,510. Now we move to the capital and liabilities section. Let's do the capital first. So under capital, there are going to be three items. So the first one is going to be the opening balance. Then we add the profit for the year. And we subtract the drawings. So the opening balance is going to remain the same. Let's have a look. The given opening balance is of 56,950. We can exactly put this amount in our corrected statement of financial position as well. So that's just going to be 56,950. Then for the profit for the year, we will use the revised profit for the year that we calculated in the previous part. Let's have a look. We calculated it to be 14,360. So we're just going to substitute this value right there. Finally, we have the drawings. There was an error relating to the drawings. So the balance of the drawings account had been understated by 580. So whatever balance that is given in the above incorrect statement of financial position, we'll just have to add the 580 to it in order to rectify this error of understatement. So the drawings given in the question is 18,450. So let's rectify this error. Firstly, we had the value of 18,450 and we were told that it had been understated by 580. This gives us the total balance for drawings to be 19,030. Now, in order to figure out the total balance on the capital, we just have to add these three amounts. So that's going to be 56,950 plus 14,360 minus 19,030, which gives the value to be 52,280. Now let's have a look at the incorrect statement of financial position again. So the non-current liabilities section records a bank loan repayable on March 2021. Alright, and this is the statement of financial position ending at 31st December 2020. And this bank loan is repayable within the year, which means that this is not a non-current liability since we need to pay it within a year. If it were to be paid after a year's time, then it would have been recorded under the non-current liabilities section, but since it needs to be repaid within this particular year, we will record this bank loan under current liabilities. So there is not going to be any items under non-current liabilities. We can straight jump to the current liabilities section. Let's do that. So the first one is going to be the bank loan. And the bank loan had the amount of 4,900. We can just record it as it is. Let's look for other items that needs to be recorded under this section. So the first one is going to be other payables. Then there's bank overdraft. Then there's trade payables. So we rectified an error relating to receivable account, right, which had been included in other payables. So in other terms, we can just say that the other payables had been overstated by 220. So we need to subtract this amount of 220 from the given amount recorded in the incorrect statement of financial position, which was 700. So let's record the other payables first. So the given amount was 700 and it had been overstated by 220. Now this gives us the balance to be 480. Let's look for the next item. That's going to be bank overdraft with a balance of 490. And there are no errors relating to bank overdraft, so we can just substitute this amount as it is. So bank overdraft is going to have the balance of 490. We have one final item relating to trade payables, and its balance is 11,360. And since there is no error relating to this item, we can just copy the exact same amount. So that's going to be 11,360. So we can find the total for the current liabilities by adding these four amounts. So that's going to be 4,900 plus 480 plus 490 plus 11,360. That gives us the total current liabilities to be 17,230. Now we can figure out the total for capital and liabilities. In order to figure this amount, we just add the total for the capital and the total for current liabilities. So that's going to be 52,280 plus 17,230, which gives the total capital and liabilities to be 69,510. We can see that the total for assets was also the same value, which means that our statement of financial position is now correct. This completes the second part. Let's move on to the third one. We need to identify three types of errors which do not affect the balancing of the trial balance. So the first one is error of omission. So this error arises when anything is completely omitted from the books of accounts. The second one is error of commission. So an example of this error could be recording of the payments made by customers correctly, but then recording the customer's name to an incorrect ledger. Then the third one would be error of principle. This types of error arises when an entry violates a fundamental principle of accounting. So these are the three types of error which do not affect the balancing of the trial balance. Let's write it down. The first one is error of omission. The second one is error of commission. And the final one is error of principle. Alright, this concludes the third part as well as this question. If you found this video useful, make sure you hit the like button and make sure to leave a comment below. And make sure you subscribe and hit the bell icon so that you do not miss any of these videos in the future. Thank you.